Ladies and gentlemen, good day, and welcome to Zim Laboratories Q2 and H1 FY26 earnings conference call, hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Deepika Sharma from Go India Advisors. Thank you, and over to you, ma'am.
Thank you so much. Good morning, everyone, and welcome to the Q2 and H1 FY26 earnings call of Zim Laboratories Limited. We have on the call Dr. Anwar Daud, Chairman and Managing Director, Mr. Zulfikar Kamal, Director of Finance, Mr. Shyam Mohan Petro, Chief Financial Officer, and Mr. Zain Daud, Investor Relations. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. May I now request the management to take us through the financials and business outlook, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Deepika. Good morning, everyone. This is Anwar Daud speaking. A warm welcome to all participants joining us for Zim Laboratories Limited earnings conference call for the second quarter ended September 30th, 25. I hope you have had the opportunity to review our results and the accompanying presentation available on the exchanges. Let me begin today's discussion with an update on our EU GMP remediation and CAPA implementation plan, which remains our highest strategic priority. As you can see from the CAPA progress chart in the presentation, we have made steady progress across key milestones over the past 2 quarters and are working on an aggressive timeline to complete the EU GMP audit by March 26, with supplies expected to resume by Q1 or Q2 financial year 27. We recognize that this certification is critical to unlocking value across our regulated markets. At the same time, we are taking proactive steps to maintain business continuity through alternate measures. These include triggering audits from other emerging markets to broaden our certification base and ensuring access to additional markets. In parallel, we have also initiated site transfer projects for select key products. For instance, we have commenced the transfer of tamsulosin dutasteride, one of the products which were in late stages of submission, to a PGA-approved site, with commercial supplies expected to start within the next 6 months. Similar strategies are being executed for dimethyl fumarate and azithromycin suspension at EU and MHRA-approved facilities to ensure uninterrupted supply. While this may have a marginal impact on margins, it reinforces our business resilience. While in the interim, we may do site transfer for particular products for particular markets, our primary focus remains on getting EU GMP accreditation back and supplying products from Zim's plant. Moving to performance highlights, I am pleased to share that the pharma segment delivered healthy growth, both quarter-on-quarter and year-on-year, reflecting continued traction in our core business. However, overall revenue growth was moderated by a decline in our nutraceutical segment, primarily due to the deferment of some domestic institutional orders. We expect these orders to materialize in Q3 and Q4, which should support recovery in the second half. Let me provide a summary of our performance for Q2 financial year 26. Total operating income stood at 887 million rupees, marking a 23.6 sequential increase, supported by stronger traction in our core segments. EBITDA improved to 78 million, with margins rising to 8.8% from 7.9% in Q1 FY26, while PAT narrowed to a loss of 4 million compared to a loss of 19 million in the previous quarter, reflecting better operating efficiency. The pharmaceutical business continued to drive overall performance, contributing 83% of total revenue at rupees 732 million and growing 30.7% quarter-on-quarter. The Nutra segment accounted for 17% or 155 million, with decline primarily due to softer domestic demand, where revenues moderated to 38 million versus 50 million in Q1. Looking ahead, Our order book for Q3 remains strong, supported by a healthy inflow of PFI orders and a gradual pickup in domestic demand. Based on our current visibility, we expect the 26 revenues to be in the range of FY25 revenues, broadly in line with last year. And to summarize, we are navigating these short-term challenges with clear focus and strategic execution. Our near-term actions are centered on completing EU GMP remediation, securing alternate certification, and strengthening business continuity. The management team remains confident that these efforts will position Zim for sustained growth and value creation once regulatory clearances are reinstated. With this, I now hand over the call to our CFO to give you an overview on the financial. Over to you, Shyam.
Thank you, Dr. Daud. Good morning, everyone. The total operating income for Q2 FY26 stood at rupees 887 million, reflecting a 23.6% increase on a sequential basis. This moderation on a yearly basis was primarily due to continued delays in innovative-led segment impacted by EU GMP suspension and slower order inflows in select export markets. That said, our pharma segment delivered a healthy performance during this quarter, contributing about 83% of the total operating income, while the nutraceutical segment accounted for 17%. The year-on-year decline in Nutra business was mainly due to deferment of institutional orders, though we expect the normalization will be in H2 FY26. Our export revenues stood at 728 million rupees, reflecting 21% sequential improvement, supported by better traction in our base business and steady execution across key markets. The domestic business contributed rupees 127 million, broadly stable compared to the previous quarters. On profitability, our EBITDA for the quarter stood at rupees 78 million, translating to a margin of 8.8% compared to 7.9% in Q1 of FY26. This sequential improvement was driven by better product mix and operational efficiency. The company reported a net loss of rupees 4 million compared to loss of 19 million in the previous quarter. In terms of business mix, the NIP and OTF portfolio contributed rupees 81 million for Q2 FY26, while the licensing income for Q2 stood at 29 million rupees. On R&D front, the company invested rupees 76 million during the quarter, primarily towards new product development, bioequivalent studies, and regulatory filings. Our focus remains on strengthening the innovative product pipeline and accelerating filing activity across emerging and regulatory markets. To summarize, Q2 reflected sequential improvement in revenue and profitability, supported by recovery in the base business, continued licensing momentum, and cost discipline. Thank you. With this, I would like to open the floor for a Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on a touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Divyansh Thakur from Finterest Capital. Please go ahead.
Sir, congratulations on the results. Sir, I wanted to ask, what is the expected EBITDA margin trajectory for second half fiscal year 26 and for fiscal year 27, particularly considering site transfer related cost pressures?
Good morning. This is Zulfikar Kamal. So basically, the guidance what we are giving for the future is normally for this year only, and guidance for the EBITDA and revenue is on the similar terms, as we are not expecting the EU GMP and the innovative product sales in this quarter. As you have seen from the managing director's deliberation, that the NIP product sales for the EU market will start from Q1 or Q2 from the next year. So there will be definitely impact on the EBITDA increase in the next year, for which it will be too early for us to give the guidance. Thank you.
Okay. Thank you so much, sir. Following on that, what is the working capital intensity historically tends to rise in H2, right? So should we expect a similar trend this year?
No, the working capital definitely will be increased commensurate to the increase of the turnover. As of now, the ratios remain same. The inventory level and the debtors level are in the range of a normal 78 days to 90 days, as well as the debt and all remains in the same gearing. There is no further debt increase going forward.
Okay. Sir, last question. You also mentioned that proactive business continuity steps. Could you quantify how much revenue you expect to safeguard through alternate certifications and site trans?
See, that already we have mentioned all our NIP product and the UGMP product. The turnover for which we have already received the MA will come in the next year. The guidance of which will depend on the agreements what we have expected for the next year, and it will become accordingly, which will be reported once the business starts.
Okay. That's all from my side, sir. All the best.
Thank you.
Thank you. The next question is from the line of Shreya Chatterjee from Ageless Capital. Please go ahead.
Hello, sir. Thank you for taking my question. My first question is a bit more details into the UGMP non-compliance report that is now available. So there, regarding the two critical failures, one of them is stated as some fraud in the HVAC order book, HVAC building or HVAC logbook, something of that sort. So could you please explain what is that and what is the remediation plan going forward? And also you mentioned that you are strategizing to supply some of the products from an alternative site. So what's the roadmap going ahead? If you could just explain. Thank you.
Yes, Shreya. Thank you for the question. See, the report that we received initially was about the possibility of to commit fraud. There was a manual book which Delhi actually where the engineers are supposed to give a daily record of the upstream and downstream pressure in the air handling unit which supplies to a core area, which is supposed to be written there. So that was incomplete, and there was a pen inside left behind by the technician. And for the next days or the next, whenever he would visit again for the next reading. So, certainly we have tried to explain that there wasn't an intention to commit fraud is not fraud. And that interpretation of the intention to commit fraud was wrong, and we have done our investigation, and we have sent this investigation according to the forward to the authorities as part of our CAPA plan and submission. You know very well this is a secondary observation on the overall process, manufacturing process controls, because the core area also has technicians recording the pressure, temperature and humidity, which was verified as being the right conditions for carrying out our manufacturing processes. And during this inspection, no process in any manufacturing and operations area of this the company or no data as recorded by the company for manufacturing as well as other relevant factors which affect the product quality was found to be deviating or having any concern. And there are some markets where after the company has provided the QRM and on the QRM basis the product robustness and the quality robustness, the company has been allowed to start supplying.
So how confident are we that through the CAPA plant we'll be able to get out of this failure?
Well, the CAPA plan has been accepted, and we are continuously working on implementation. We realize that many of these, the question marks that are raised by different authorities are basically a result of over-reliance on manual documentation. The company has instituted a switchover to electronic documentation where these kind of doubts are not likely to be raised during the remediation inspection. We are on track, and I have given you the deadline when we expect this inspection to take place. Okay? And I think because the kind of comments on which we have received our non-compliance are basically related to the manual documentation, and some of it is related to culture that's easier. And probably we are on the right track, I would say. We have hired a domestic consultant who is working with the company, Indian consultant who is working with us for the remediation training. We have made suitable changes in our quality assurance function, training and other issues that we thought that would help, result in a good compliance culture. We have also hired a consultant from Europe to help understand the way assessors would look at this and train and help the company in better management of inspections in the future. So that's our strategy. We are closely monitoring it. And at this moment, I would say 3 action taken reports have already been provided. CAPA has been accepted by the assessor, and the 3 action taken reports have gone a long way in providing that comfort to the assessor.
Okay, sir. So my next question is that the inventory and receivable days have gone up a bit this quarter, and there's a component, other current assets, that has significantly come down. So if you could explain what is that other current assets and where do you see the inventory and receivable days going forward?
Yeah, ma'am. So the inventory days basically has gone from 83 days to 109 days. If you see the absolute terms, it has gone around increase of 10 crores because we have already seen historically the second quarter and the third quarter, we have got a robust order book and we have to complete the order book, and because you have seen that we are a little bit shortfall in the first half, so we have to compensate the sale in the second half. Already orders are received and the inventory are in place, and we are able to, because of the GMP audit, some manufacturing activities were delayed and hampered. Now everything is clear. We are set to increase that, do the sales in the second quarter and the third quarter.
So we are expecting a moderation on the this inventory and other areas as in the third and fourth quarter.
And so what is that other current assets that has declined?
Sorry to interrupt, Shreya. Sorry to interrupt.
Yeah.
If you have a follow-up question, yes, please. Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants in the conference, kindly limit the questions to 3 per participant. Should you have a follow-up question, please rejoin the queue. The next question is from the line of Deepesh Sancheti from Manya Finance. Please go ahead.
Hello, sir. Am I audible?
Yes, please go ahead.
Yeah. My first question was that pharma grew 30.7% Q on Q, but Nutra declined. What do you expect Nutra demand to? When do you expect the Nutra demand to stabilize? And are institutional orders fully expected in Q3 and Q4?
That's right. I have already made that statement, and we have an order book which is indicating that the domestic demand and the export demand for Nutra, which are products which are legacy products for the company, they will all revive going forward.
Right. And could you provide more clarity on the key remaining CAPA actions and whether March 2026, as you mentioned, remains a firm timeline for EU GMP audit?
This is our expectation because we will be really having taken care of the various actions which are required to be completed before the inspection can take place. You know very well that it depends upon the authorities, and we certainly think that this would happen in March for a very simple reason that some of the products that this company makes are strategically key for the markets as well. And there is an acute shortage of products like, for example, pancreatin in these markets. And looking at the shortage, we feel we can make a compelling case to the authorities to come earlier, the earliest moment when we feel that we are satisfied that the CAPA remediation has taken place to a point where the inspection would show that company has made very positive progress on all the areas of concern which had been raised in the original audit. So, from our side, we are making all efforts. There are several remedies available to the company. If the agency delays for some reason, another country where another member of the union where the product is in acute shortage could be requested to come and visit. So, there are many avenues for the company to go for an accelerated remediation visit. But at this moment, we feel confident, and we have been given that from our clients as well. We have been given that indication that our inspection would not be held up for any reason, including the reason of any calendar being blocked because of the severity of the shortages of some of the products that the company has filed for.
Right. And now, have we appointed any third-party consultants? And what are the major areas where the... Sorry, yeah, you can answer that.
No, I think you'll lose one question. So, major areas?
What are the major areas where the auditors have highlighted the gaps? And have any re-inspections or interim reviews been planned?
Yes. So we have done two things. There is one consultant who is an expert in remediation and on data integrity, who has, and the entire their team is Indian, and they come with a lot of experience of working in large Indian companies and working for remediation for many large, well-known organizations, which I'm not at liberty to disclose on their behalf. And they are working continuously with the company to address the CAPA concerns which were raised through various observations, critical as well as major. So, 3 action taken reports have been submitted with their help. And we have also taken on board a European consultant who is oversighting these actions by the Indian consultant. The third thing which we are doing is we are rejigging and strengthening our QA team so that our QNS and all other things which were observed by the auditor are much better addressed in the remediation inspection and all other inspections going forward. And the overall culture of quality consciousness is the kind of improvement which is desirable, which is considered as desirable by the auditors. Regarding what issues were addressed, I have already spoken on those. I think in one sentence, the issues were suspicions of certain wrongdoing based upon the inspection of manual documents which are manual documents and e-books which are secondary in nature. Some deviations on practices which were part of our own QMS, but these were more of a secondary and supportive nature. The basic quality management system of the company, which takes care of the conditions of manufacturing and assuring its integrity, and therefore the data which is there to prove that all the products are manufactured, keeping all the quality safeguards in place and tested also, ensuring all these quality safeguards. has not been commented on. It's basically some practices. We think that if we can improve the culture to the point where even these tertiary observations are not held in doubt, and we are doing that certainly. And also, we are taking steps now to shift many of these manual documentation, e-books, books and others to electronic data, which will be self-recording, and therefore the inspector will not be able to doubt, because there are many systems and software which automatically record these things. So there would be which have the CFR 21 compliance, so that whatever is recorded on a certain day has the fingerprint and authentication of having been done on that date and at that time, and all the things which are recorded. Actually, there are many devices which record by themselves the temperature, humidity, and all those kind of conditions which can cause some kind of doubt when an assessor sees a manual notebook. So it's more a problem of manual record keeping rather than bad practices in our company, as this is what we have, the explanation we have provided in our action taken reports to the authorities, and they have accepted the CAPA.
Right. Now, the promoter holding is pretty low. I mean, 33% it is.
Sorry to interrupt, Dipesh. Sorry to interrupt. There are many participants waiting. Yes, please.
Okay.
Yes, please. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants, please limit your questions to 2 per participant. If you have a follow-up question, please rejoin the queue. The next question is on the line of Pratna from Neo1 Advisors. Please go ahead.
Hello.
Yes.
I just have a couple of questions. One is your innovative INP and OTS businesses were impacted due to the EU GMP suspension. Could you quantify the revenue loss or deferment due to this?
No, ma'am. The policy of capitalization and WIP is on a very prudent as followed by the industry norms. We don't see any capitalization or something of our intangible assets, because we are getting the MA process is going on, and whenever the MA comes, we capitalize the intangibles, and then within 3 years of the receipt, we are able to amortize it, and we don't see any deferment, something like that. Thank you.
Okay, all right. The next question is, with 4 new marketing authorizations received this quarter, what is the expected commercialization timeline for this product?
Yeah. So the market authorization, what we have received from other than EU, we are on the process of commercialization. It usually takes around 3 to 6 months after getting the MA for the parties to launch the product.
We have received 2 marketing authorizations this year, one from EGA and one from MHRA. And we have quickly taken steps to shift the product to different sites and have had these discussions with the authorities. And as both the products are in short supply, we hope, although we have not made it, we hope that we will be able to start supplies in the last quarter or the first quarter of the next year. And we are shifting these products as a support to our clients and as part of the policy that we have to different sites which have already been audited by the company. And these transfers are, as we speak, these transfers are under process.
All right. Just one last question. What structural changes are you seeing in the Nutra customer base, pricing, competition, or order cycle elongation?
We don't think Zim's Nutra product will be impacted, because we use the same technology or similar technology to the one we have for making our other complex generics, and we apply these technology platforms into the Nutra business. So it's equally complex. And for what we do, we don't see the kind of crowded competitive space which exists for other Nutra players.
Okay. All right. That's it from my side. Thank you for taking my question. Thank you.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Hello, am I audible?
Yes, please go ahead.
Yeah, sir. So just a few questions. So one is based on this report, are our future MAs or our existing MAs can we file future MAs? Continue to
they have been permitted to, no, the future MAs cannot be filed. Fortunately, we have two types of activity for filing. One was the MAs that can be filed and the products are off patent. So those are the filings continue, and we continue to receive the queries and other things from the assessors. And there are a few products which were going to go off patent later on in 2027 and 28. So a little bit of delay there of 3 or 4 months in filing does not impact the overall filing strategy of the company.
Okay. And I think you mentioned you've got an MA from MHRA. Did I hear it right? Because we were in, is this for pancreatin?
Sorry?
Is this for pancreatin, sir?
No, for another product.
Okay. And what is the status of the
MA has been received by the client. As you know, we out-license the product. So the MA has been received by the client in MHRA. It's been received for, have we done the disclosure? It is dimethyl fumarate.
Okay.
On the basis of the MA which had been earlier received before the inspection by the company in Portugal.
Sir, this was when? This is post GMP audit?
Before GMP audit. And now this MA has been received post GMP audit.
Yeah, that's what I was asking. This is post GMP audit, right?
Yeah.
So, got it. So,
sorry to interrupt, Rohit. If you have a follow-up, please rejoin the queue. Yes, if you have a follow-up question, please rejoin the queue. Let you there?
Yes. Yeah, I just have a follow-up to this question. So if I can just complete and then I'll join back.
Let him go ahead because...
Yeah. Sir, on this MHRA, on this MA, we also were in final stages on pancreatin. So what is any update on that?
Yeah, it's ongoing. We are giving replies as they are coming from different member countries, and that's ongoing. So, as I said, the process, the filing process continues. That's not being stopped.
Okay, I'll join back in the queue.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
So thank you for the opportunity. Sir, I wanted to understand when we say that for FY26 our revenue and EBITDA would be similar to what we did in FY25, that would mean a 30% jump in our EBITDA during the second half. And sir, with the new innovative products and the OTF products sales being subdued, sir, so can we expect still to make those kinds of margins and EBITDA in H2, or that is just kind of an aspiration and we'll try to reach till wherever we can?
Well, we already had a business plan, and the thing is, and historically we have done about 35 to 40% of our business in the first half, and the remaining business in the second half. So that's another point to make. Also, we already have orders in hand. And that gives us the confidence to be able to inform you that, probably we'll do as we did the last year based on the orders that we have and the expectation. So it's a mix of different things that we have which gives us the confidence.
Got it. So are we seeing margin improvement and revenue jump in our base formulation business as well?
So if you see the last year also, in the previous year and the current year, we have the contribution of regulated market product was not that significant as MA was not received. We had expected an MA receipt this year, which we have postponed for the next year. So the similar business will be what we have generated last year will continue. There is very less impact on of the UGMP inspection on the existing business. And what our MD has said, that the Q1 and H1 and H2, normally the H2 is good because we expect government orders to come in H2, and most of our clients' orders we receive in H2. For that only we have built our inventory and orders in hand. So we are a little bit confident that whatever guidance we are giving, that the year ending will be similar to the last year. We stick to it and we hope that we'll be able to achieve it.
Got it. So just a follow-up question, sir. If you could just help us understand what would be the top few products on our base core business. And sir, was this business it hasn't grown a lot previously. So what gives us the confidence that this business is growing? Is it that competitive intensity has reduced, or is it something else?
No, I didn't understand your question.
So, sir, I'm relatively new to the company, so I wanted to understand that what would be the top few products in our base business that we mentioned, the pharma business, excluding the NIP and the OTF products. So what would be the core few products of that business? And sir, what gives us the confidence that this business...
Normally we don't give out these numbers, we as a policy, but definitely we provide enough material in our investor presentation, which gives a fair idea of how the strategic thrust of the company is working. So in terms of dividing the business between pharma and Nutra, in terms of dividing the business between NIP and the conventional business, in terms of dividing the business between the PFI and the formulation business, all those information, all that information is certainly available. Because, there are certain elements to this information which are confidential in nature. We work with many clients with whom we have confidentiality agreements. So we observe all those things, and I think the more relevant is, whether the strategy of the company is working or isn't working. So I'm happy to inform you that the NIP products are, even though we have some temporary impediments in being able to capitalize on our NIP products in the regulated markets to some extent, because we also told you some redeeming features where we received the MAs and might be able to have a quick supply situation in the coming 2 or 3 quarters. But the NIP products are also getting approved in different other markets, which might contribute to a little better outlook for the margins and other things as those registrations come in.
Got it. And sir, why were these NIP and OTF products impacted during H1? Because currently we are not selling it to the regulated market. So were the customers, whatever customers in the emerging markets or rest of the world markets that we have, so did they delay this business during H1 because of the audit?
So there was some effect because of the audit, because we needed to assess and seriously consider whether the observations that had been noted, given by the auditors, whether they would actually attract any quality-related issues for all the offerings that we make. We have the same plant where we sell to every area in the world, not only the regulated market. And therefore, certainly, there were some orders which were not executed as a matter of prudence, and even though there were orders and other things. So now, slowly, one by one, the orders are being executed, and there's a robust order list as well. So that's how you see the second quarter moderating, and the third quarter also. You will see the results of the other parts of the Zim story playing out, like having about 60% of the business in the second half. All those things will, and we have very transparently given the reasons. Also, Mr. Patro read out speech. I think you spoke about. Mr. Patro spoke about the reasons for not having the not having the kind of business which we had in the corresponding quarter of last year.
Got it. Sir, thank you so much and all the best.
Thank you.
Thank you. A reminder to all participants, please limit your questions to 2 per participant. If you have a follow-up question, please rejoin the queue. The next question is on the line of Jasmine from Fortune Advisors. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes.
Yes, please go ahead.
Sir, can you elaborate a little bit more on the contract manufacturing for alternate sites that you mentioned in your PPT also? This is for Star Product 1 that you mentioned. So can you just tell us about what is the journey to finalizing the alternate sites, and is it right now only for one product? And also, if you can add that, is it for alternate markets or can you sell to EU from these alternate sites?
Yeah, these alternate sites they possess the accreditation required for actually being able to transfer these products. 2-3 months of stability studies or 6 months of stability studies as the market requires, and introducing these sites as alternate sites in our dossier and to the authorities after prior discussion with them and the client. So these are accredited sites, and we have those. We have made those arrangements. There are 2 sites and about 3 or 4 products, and they have existing accreditation, and they are primarily contract manufacturing sites with all the accreditation. They are manufacturing these products for several other clients as well, and sure, they will manufacture for us as well.
Okay. But sir, right now you are evaluating this only for one product, and also my other question was, can you supply to EU? Sorry?
Yes, that's why. They have the accreditation. They have the accreditation for supplying to the EU, Australia. Because of that, they might get a faster access to MHRA, UK. So these are the markets where we have signed the agreements for the products which are going to be the first to come up with the MA.
Okay. So my second question is that, sir, for NIP OTF products in the existing market, you have answered it in the previous participant question also, but sir, I'm still not very clear about it. So if you can maybe elaborate a little bit more. So like Q1, Q2, FY25, if we just talk of the NIP products, we did about 15 crores, 12 to 15 crores in each quarter, and which is substantially reduced in the current half year to just about 1 crore in the first quarter and 4 crores in this quarter. I'm particularly talking about NIP products only. We were earlier also not supplying that much in EU. So what is leading to this decline, sir, and is this going to be for the remaining part of the year also? What exactly is the reason behind it?
It's more related to I would say it's more related to the order position. It's a more order position effect. Okay, And you would see all this moderating over the next 2 quarters.
So moderating means that it will be less.
Q1 and Q2, it is 15 crores. NIP products is about 15 crores of business in the Q1 and Q2. And the last, including licenses, fee was 2.9 crores.
In Q1 it was 46, it went up to 81 in Q2. So there is a constant improvement as well.
If you see the innovative product contribution page of the investor presentation, you will see there is a consistent progress.
So yeah, it is in the quarter, but as compared to last year, so YOY I was asking. YOY there is a decline, whereas in the last year also there wasn't any.
Yeah. So madam, there are basically, it is of 2 parties who have been, we have supplied in the last quarter and previous that. So they have, the orders are in hand. Their delivery schedule is of the 3rd and the 4th quarter, and we hope to compensate it in the 3rd and 4th quarter.
Okay, sure sir, thank you. Thank you sir, those were my questions.
Thank you. The next question is on the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello. Good morning, team. Thank you so much for taking my question. Hopefully I'm audible.
Yeah.
Yeah. Hi, sir. So, sir, first question was a bit regarding our margin. So, as you're saying, we've hired consultants and, we are shifting to maybe more digitized. So, that would also be, coming with its own cost, right? So, is that the reason also our margin is a bit more depressed than the lower turnover? Is that fair way to look at it?
No, the CAPA plan and other things are mostly related to some of the CapEx expenses. The margin have been declared due to the change of product mix and the turnover which has been a little bit less from Q1 and in the H1 and little bit reduction in our NIP sales. Otherwise, if you see, the margins will remain constant going forward in Q3 and Q4. And the expenditure on the fees, which has been said, will not make much of an impact if the impact is put on the yearly basis. It is not that much, amount is not that big that it will make reduction in certain margin by the fees.
Okay, sir. And sir, when we say we aspire to, come back to be able to, give results similar to FY25, so we mean in terms of, we did 44 crores of EBITDA in, FY25 and first year we are around 10 crores. So we'll be able to do 30 crores of EBITDA in H2?
Yeah. So, just because if you want to understand the exact margin overall on the gross margin side, the gross contribution has increased from 49.3 in the H1 from H1 25 to 51 in H1 26. So that, as I mentioned, the margin impact is not that much. As far as the EBITDA is concerned, if the 60% sales comes in the H2, that definitely keeping the fixed expenses constant and the operating cost constant, it will definitely improve the EBITDA in the H2. So we hope that in the lines of the last year's margins and the gross contribution, we hope that we will be able to achieve the EBITDA, what we have projected, what we are planning to do.
Okay, fair enough, sir. I just wanted to know, in terms of CapEx, what are we spending right now? Additional CapEx are we spending?
Yeah. So as you have mentioned in earlier calls, the CapEx have been now completed. Whatever CapEx which we had planned earlier, there is a marginal increase due to around 5 crore rupees on account of CAPA and around another 5 to 7 crore for completion of the balance CapEx, which is going to be completed, for which we have already tied up our borrowings. And there is no much further increase neither on the borrowing side or on the CapEx side, except for the CAPA implementation plan, which we have planned and approved from the board of around 5 crores.
Okay, okay, fair enough. So, and just last question, a bit more regarding the contract manufacturing where we are trying to get through. So that will be able to give us the margins that, we are doing in our normal business, or how would that part of the, business work? Like, because it's not our own facility, so how would it, look for us, sir?
Yeah. There will be a marginal impact.
But we
There will
could
be
be
a
able to
marginal
still
impact.
have double-digit margins, right? Like 10% we can
Yeah.
easily do
Yeah.
from
Yeah. Yeah.
contract
Yeah.
manufacturing.
Yes. Our margins will substantially, because see, the contract manufacturing charges that are charged when you go to a third site, and there are also expenses that you make when you make it at your own site. So the difference in margins is the difference of these two items. Our own manufacturing charges against the margins, against the contract manufacturing fees being charged by the contract manufacturer. So it's not substantial looking at the kind of products and the prices we have agreements for.
Okay, okay, fair enough. So, and just last question from my end. So, I understand, we are trying to get the remediation as fast as possible. So, we are hoping that, everything flows to our plan, and FY27, we can start, with our EU as normal business. So,
That's right.
in that case, how would FY27 roughly look? So, because, will we be able to then go back to it? Because despite having, lower sales of EU, we're trying to manage, FY25, because it is commendable in itself, and our gross margins are also increasing. So FY27, if all goes well, like should we be able to see, higher margins and, a substantially higher revenue? Is that like a fair way to look at it? Like we could be able to cross like 20-25% growth in terms of revenue, and like margins also like could be the best that we've ever performed. Like, is that our endeavor, sir?
That's our endeavor.
Okay, okay. So 25, if everything goes well, 20-25% growth and like 14-15% margins, can that be possible?
That's what earlier guidance we had given, and we are sticking to it. Only the time difference has happened. The delay of little bit impact because of
3 to 6 months.
yeah, within 3 to 6 months. So yeah, we have that already. We had given some guidance earlier after when the EU phase will start.
Okay, okay, fair enough. So yeah, that's it from my side. Thank you so much, sir. All the best.
Thank you.
Thank you. The next question is from the line of Pujit Agarwal as an individual investor. Please go ahead.
Hello, am I audible?
Yes,
Yeah.
please go ahead.
Yeah. Hi. So I just wanted to understand, like, regarding the debt number, like around 120 odd crores total. Is this the peak, like, considering working capital and term loan?
Yeah, the debt includes the term loan of around 66 crores and cash credit limit about 51 crores.
Got it. So this is peaking out, right? Like somewhere or the other, we're gonna start repaying the term loan going ahead, like incremental balance.
Yeah. This is like your image is the payback is the most.
Because now further CapEx have been restricted. Now the CapEx have been completed. Whatever debt which has been increased is there, and now the term loan repayment is already started.
Got it. And I just wanted, to understand regarding the MEs. Like, I mean, we've been waiting for, let's say, 1.5 or to 2 years regarding tamsulosin, pancreatin. So I just wanted to understand what's happening there, or what is the indicative timeline?
Submissions are ongoing, Puneet. Submissions are ongoing. We have received actually tamsulosin dutasteride from Australia, TGA, where we are, transferring the product to a different site which is TGA approved, so that we can start the supplies there after 3 months or 4 months, hopefully.
Right.
So the dimethyl fumarate MA which has been received in UK, the supplies can be started in the next few months moving forward. The pancreatin submissions are ongoing. There is a 210 days clock. So, being a very strategic product under shortage and, there are not many players in this product. So therefore, the authorities have had a lot of queries which have been answered satisfactorily by us, and it's an ongoing submission. So whenever by the time the MA comes in, there's some time which the authorities are taking for the MA. But it's in schedule. There's no delay.
Right. And I just wanted to understand, sir, we have been audited like 3 years in a row. Like, what exactly went wrong in the audit that, I just wanted to understand, for example, this was the first time a German auditor was coming to audit our plant. Do different countries in Europe have different ways in which they audit our plant? Since it's so critical, Europe actually is one of the most critical elements for Zim to grow as a company. So I just wanted some understanding regarding the above.
Yeah, it has happened to the best of companies. An audit is how you actually take care and how you face your auditors at a certain time. And certainly the best of organizations can be caught off guard and aligning themselves with the latest safeguards and become maybe as you know, whatever we do, in the end, it's it's how you face as well. In the beginning, if you've been following this discussion and the questions from the beginning, you would know that I spoke about what were the questions being raised. And actually, most of our clients who know the audit has gone have also spoken about and other auditors we have spoken to have opined that perhaps some other auditor would not have taken such a serious view of what they observed. They would have taken it as a major point, of course, because their failure to record things are not. If you say that you are going to record and if you don't record, then it's a failure, and some course correction is certainly required. But perhaps another auditor would have not said that there is an intention to commit wrongdoing or fraud. It's just because some documents are incomplete.
Got it.
Okay. During this audit, there was also audit of the products, other data that is relevant to the product and the manufacturing processes. And it was quite an in-depth audit because of how the auditor was looking at the systems existing in the company, but they did not find any big observation or any significant observation on the product, the dossier, the product, the information that goes into the product dossier and the quality of the information. They have not commented on that, even though they did go into the depth.
Got it. Okay, sir. I wish you the best of luck. Thank you so much for answering my question.
Thank you. Thank you for your question.
Thank you. The next question is from the line of Ashwin Reddy from Sampo Investments. Please go ahead.
Yeah, hi, good morning. Thank you for the opportunity. So my first question is regarding the NIP and the OTF contribution. So in the last year, in Q1 and Q2, was there any significant part of the licensing revenues which came in, which kind of pushed up the numbers for you, and which is not there this time around? Or is the difference is purely due to the revenue from sales only of the OTF and NIP?
Yeah. So it is because of the difference of sale. Two customers which have taken the material in the last year, the first H1, we are expecting their orders to come in H2 to compensate the same. There will be some impact on the licensing fees. There may be chances, but we are already negotiating with the party and communicating with them. and we are hopeful that it will be on the same line what has been given earlier. Because these
what's being basically is that in a couple of quarters, this should reach back to 15 crores odd numbers. Is that a good thing to work with? 15 crores?
Yeah, because these are all emerging marketing products for this NIP sales. So we are expecting that we'll be on the similar line, which has been in a previous year.
Great to know that. And the second question is regarding the base business. So whatever issues that we were facing in the past, one, are all those now behind us, and are we seeing steady growth from here in the base business? And secondly, in this, is the growth coming from the PFIs or from the finished formulations within the base business?
Yeah. So the base business, definitely, earlier we were facing some issues on the currency issues were there, which has been sorted out. The market has become more stable now, and we have been able to get the business which has been earlier little bit, there was some traction earlier. So we are again confident that our base business will go both in PFI and in the formulation front. Our new MAs have already for ROW market have started coming in. So again, we are hoping that it will also have a positive impact on the revenues. So definitely the base business, we are expecting in this year to be in lines which will be able to compensate the shortfall in H1, and we will be able to achieve the last year's number in H2.
Got it. And regarding the EU compliance bit, so I'm sure your consultants would have given also an outside limit in terms of what can be the timeline. So what is the outside limit in the timeline? What is the worst case scenario for you?
The consultant has given a timeline to when the company would be compliant.
Okay.
The consultant, of course, cannot speak for the assessor. But we have been given that comfort from the assessor and the countries in which the MAs have been filed, the authorities there, as well as our clients, that some of the products being in severe shortage,
right?
Perhaps this assessor would come in time, or another country member assessor could be convinced to come and audit and see whether the CAPA has taken place within 2 or 3 months of this timeline when we complete our to our satisfaction, when we can write to the assessor that yes, we are ready for the inspection.
Got it. So basically by Q4 is when the consultant has said that you'll be ready from your end.
At this moment, this is your hands, but yeah, we have put in a robust process of verifying whether the inspection we are inspection ready, because there is a consultant working with the company inside the company, periodically visiting us, and there is also a consultant who is oversighting this entire process from Europe, who will have several visits to the site and verify on his own whether the steps that need to be taken to convince the authorities are in fact being taken by a team consisting of the in-house quality assurance unit, the company, and all the technical areas, personnel working in all the technical areas, and also the reports which are being submitted with the help of these consultants to the authorities are verified to be actually accurate on the action taken reports, and the commitments that are being made and the compliances that are being made based on these commitments are on track. So that's the system we are following. I believe is a fairly robust system. I think one consultant working inside the company and another consultant oversighting this whole process and satisfying the authorities that all the steps that need to be taken are being verified twice, not once.
Great. Thank you so much and good luck.
Thank you.
Thank you. The next question is on the line of Rohit from iThought PMS. Please go ahead.
Yeah, sir, most questions have been sort of answered. So just one or two clarifications. So you mentioned that in the next in Q3 and Q4, you expect NIP and OTF to come back to that run rate that you saw of around 15-16 crores. That was pretty much the entire
that's right.
the last one.
That's right.
And this will largely be from your ROW markets.
Yes. ROW emerging. Both.
Got it. And the last question was, sir, from you. So TAM Solution is the product that you are going first, right, with the contract manufacturer?
That's right.
And so when do you expect them to, when do you see this sort of get hitting your sales? Like Q4 or Q1?
Between Q4 of this year and Q1 of the next year. Because, it depends upon actually our filing with the stability, short-term stability, and for the acceptance by the authorities. Again, whenever an external government authority comes into play, you can make a guess. You can't say with certainty.
Got it. And then post that success, you'll decide whether to go for dimethyl fumarate or both will be in tandem. So I was asking about dimethyl fumarate then. So will that be also following the same?
That's in the next 3 months it will be done. It will be transferred.
Dimethyl fumarate will be the first one then followed by TAM Solution.
TAM Solution is being transferred as of this moment. We spoke about, and we'll also make a filing the moment the transfer is complete.
Right. Okay, so sorry, so maybe I'm confused. So you were saying, so once the transfer is done, then you expect the sales to happen in Q4 and Q1, right? In a subsequent Q4 of this year and Q1 of next year.
Yes.
And what is the thought process on dimethyl fumarate?
What is the?
So, and what is the plan of action in dimethyl fumarate? Dimethyl fumarate, You were saying dimethyl fumarate, you got MA from MHRA, or your partner has got an MA from MHRA. So, what is the thought process there?
The thought process is that we will actually sell it. There's an agreement with the client. The MA has been received on our dossier, but by him, and we will be supplying to him. I think he will be the first second or third generic in his territory. So I think it's the second or third. So we believe it's a profitable product and a very important product for us. Looking at the situation for dimethyl fumarate, because we have a non-infringing process, so we are likely to have a much better margin, and also a much better opportunity going forward because the originator's patent is very well protected for the process, and we have a non-infringing process, so less likely to be challenged.
Got it. And where would be the manufacturing for this done? From the CMO partner that we are identifying for TAM Solution?
That is something, we will disclose it at the right time. At this moment, we don't think we should be talking about, at this moment, it's not the right time. And because it's another party customer, all are involved. We need to have them all on the same page before we come forward and disclose this.
Okay. And so just last clarification on this dimethyl fumarate. So do you see any sales from the semi-regulated emerging or EU markets in financial 25?
Yes.
Sorry, 26?
Yes.
Okay.
We expect sales in the coming H2. We expect sale of these products in H2 as well. We started receiving the permissions for these products in ROW and emerging markets, and we see that in the second half there will be business with these products.
Got it. Thank you, sir. I think those were my questions. All the very best with this CAPA plan, sir, and hope to have a better H2. Yeah.
Thank you. Thank you very much.
Thank you. Thank you very much.
Thank you. That was the last question for today's conference. I would now like to hand the conference over to management for closing comments. Over to you, sir.
Thank you for all your questions and interest in the company. We certainly hope, we wish things would have been a little better for all our investor fraternity and all of the investors who have been present today. But we have always practiced a culture of transparency, and good or bad, we have come forward and always respected the opinions and given the information, that the best information that we could give, and be truthful about it. Certainly, we are conservative. I'm sorry when that there is a lot of information that is not possible to provide because the company enters into confidentiality. The business model is such that there are a lot of confidentiality-based agreements. But we try our best and in our most transparent manner to keep our investors apprised of the developments in the company, and really appreciate the kind of questions and support that we always receive from all of you. So thank you. And over from us.
On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.